social economy, sports, and documentaries. So catch all the updates on the happenings around the globe. Stay focused on the fact today. Only around 8 a.m.
Hello esteemed viewers, and welcome to this fresh episode of ATN Business on Atlantic Television Network right here in the city of Port Harcourt. Wow, it's raining and it's raining money. This is this network's medium of bringing the happenings in the economy sector of the society to our discerning viewers. Take note of that. This program is aimed at bringing to the doorstep of the viewers the business, financial, and economic activities from all strata of the society. Its delivery is accentuated through the various stock exchange markets across the world, news about government, economic activities, private sector business activities, laced with expert opinions and stakeholders' opinions and analysis, laced up with the correspondent reports. You're welcome to ATM Business on Atlantic Television Network. And before today's bulletin, let's first of all see the headlines. Fraud trial. Emefiele to face fourth arraignment on April the 25th. Audit report. UBA, United Bank of Africa, records 608 billion naira profits after tax. Money is raining. Global stocks, bullish trends in world markets progresses. And on the economy, consumer price increases and remains high. Let's take a short break, and when we return, we'll reel out all the details for your pleasure. Stay tuned.
From the line across the ocean to the land beyond the mountains, through the Sahara, we bring on sport news, live analysis, expert discussions on trending stories, in updates on the happenings today. Only around 8 a.m.
Welcome back to ATN Business on Atlantic Television Network right here in the city of Port Harcourt. We are going first of all to the inflation of Nigeria, on the economy of Nigeria, the inflation rates and figures. I'm here to give you that. And now let's head on to the business of today. Nigeria's inflation figure is expected to peak at 32.4% in March 2024, hitting a multi-decade high. A report by the Lagos-based Financial Derivative Company, FDC, projected inflation in March is expected to surge to 32%, underpinned by food supply chain disruptions and lingering impact of the fuel subsidy reduction, the FDC said. It added that consumer price is further fueled by what is termed as greedification. Let's go back. Prompter, bring me back. It added that consumer price is further fueled by what it's termed, I've not heard this word before, greedification, which it means by corporate greed and the naked exploitation of consumers by conscienceless marketers. Wow, we are involved in another new realm. In a presentation at the Lagos Business School, the Chief Executive Officer of FDC, Bismarck Rewane, noted that while inflation has begun to decelerate in other countries like South Africa, United Kingdom, and India, Africa's largest economy being Nigeria, prices may increase by 0.7% points from what it was in February, and Consumer Price Index (CPI), which accelerates to 31.7% in February, according to the National Bureau of Statistics, may continue its streak until a descent is seen later in the year. Inflation is set to peak in May-June and begins to fall after the wage review, the FDC noted. The Lagos-based company noted that while the central bank has embarked on an aggressive monetary policy targeted at taming the stubbornly high inflation, it might not be sufficient enough to bring the numbers down. It said that countries like Kenya, Turkey, Egypt did more than deploying monetary tools, adding that they sourced for new money in terms of Eurobonds and bailout interventions from World Bank and International Monetary Fund. That's the friend that is an enemy that is a friend. FDC further stated that structural reforms and wage review were measures adopted by these countries in controlling their inflation figures, while FDC sees the inflation figures accelerating to 32.4%. Muhammad Sani Abdullahi, Deputy Governor of the Economic Policy Directorate of the Central Bank of Nigeria, projects that the nation's CPI to soar by 32.63%. Should we take that or should we leave that? We don't have a choice. Way back in Thailand, let's see what's happening in Thailand, not just Nigeria. In Thailand's Prime Minister, Srettha Thavisin, on Wednesday revealed that details of his government's plan to stimulate the economy by giving digital cash handouts of 10,000 baht, approximately $275, to an estimated 50 million Thais for spending at their local businesses. Srettha said that at a news conference that the 500 billion baht, $13.7 billion plan to be mostly funded out of the 2024 and 2025 fiscal budgets will be rolled out in the last quarter of the year. The stimulus and subsequent consumption are expected to boost the gross domestic product, the GDP, growth by 1.2% to 1.6 percentage points, he said. The World Bank estimates that Thailand's year-on-year GDP growth at 1.5% in December. Another portion of the funding will come from the state's Bank of Agriculture and Agricultural Cooperatives, earmarked for covering payouts to about 17 million farmers. The digital purchases will be allowed only in the recipient's own district and will not be allowed for items including oil services and online purchases. Srettha called the project a life-changing policy for the people. He expressed his disappointment that the project could not be carried out earlier, but said that the government needed to make it transparent and legal. The plan, which was a major campaign promise by Srettha's Pheu Thai party ahead of last year's general elections, had been previously criticized by economists for being an ineffective way to contribute to sustainable economic growth compared to other measures. The ruling Pheu Thai party had also suggested digital wallet payments for all Thais 16 and older, while the current plan is limited to lower income Thais, defined as people with yearly incomes not exceeding 840,000 baht, that's $23,000, and savings in financial institutions not totaling more than 500,000 baht, being in comparison $13,700. The government was also criticized for initially suggesting that it would fund the plan by borrowing. Who can stay without borrowing, which would incur a heavy public debt burden? Did you hear that? Thailand's central bank has restricted pressure from the government to boost the economy by cutting interest rates, opting to keep its policy unchanged at a meeting on Wednesday. But analysts expect the Bank of Thailand to cut its 2.5 benchmark percentage rate later this year, given that inflation has been falling for the 6 straight months. While the economy is not expected exactly in a crisis, it is in need of more support, Gareth Leather of Capital Economics said in a commentary. He noted that the central bank is keen to keep its independence, but it ultimately would lead cut rates at the next meeting in June. Thailand's level of household debt are relatively high, and higher interest rates raise borrowing costs, tending to discourage spending and investments. Should we copy Thailand or should Thailand copy us? It's up to you to decide. The Economic and Financial Crimes Commission has issued a stern warning to establishments such as schools, supermarkets, hotels, and others, cautioning against the practice of charging for services in dollars. Did you hear that? Come again. Prompter, come again. Let's go again. Bring it down, bring it down. Come again. Come again. The Economic and Financial Crimes Commission has issued a stern warning to establishments such as schools, supermarkets, hotels, and others, cautioning against the practice of charging for services in dollars or any foreign currency within the country. You must use Naira. Ola Olukoyede, the EFCC's chairman, made the announcement on Monday in the latest edition of the Commission's monthly e-magazine, EFCC Alert. Olukoyede threatened to prosecute anyone found engaging in dollarization of the economy. He emphasized that such actions would be treated as sabotage. What he said, schools that charge Nigerians in dollars, supermarkets that trade in dollars, estate developers that sell their property in dollars, hotels that are invoicing in dollars. We are coming after you, and we have made arrests in that area. Yes, if foreigners are coming in and the only means of transacting is their credit card and dollar, why not? You will get that. But document it properly as against selling things within the system, local economy, and you will be using dollars as the medium of exchange. It is illegal. Our law does not allow for that, and we have also effected some arrests, he said. He emphasized that the EFCC's commitment to eradicating illegal forex trading and ensuring that currency traders operate within the bounds of the law. Complementing on the efforts of the Central Bank of Nigeria in this regard, we are not given to relent. We are going to continue until we eradicate mutilation of currency and illegal dealing in forex. Another area is in the area of illegal forex trading. Coupled with the activities of the CBN, we are trying to ensure that those involved in currency trading are properly licensed, regulated, and do their documentation properly, he stated. Furthermore, Olukoyede condemned the celebration of criminals by some Nigerians, emphasizing the detrimental impact of corruption on society. He urged Nigerians to support the EFCC's anti-corruption efforts and emphasized the need for collective action in combating corruption. I wondered why some Nigerians will be closing their eyes to the atrocities being committed against the nation by those being investigated for financial crimes, but trying to attack the commission for doing its job. The moment EFCC starts investigating someone, those who have benefited from him one way or the other will close their eyes to what they have been deprived of by reason of that financial crime. Then they concentrate on attacking the agency. They use the media to propagate propagandas and even sometimes physical attack. Yet we are working for Nigerians. We are working to preserve integrity in the way we do things, and so we need the support of Nigerians, he said. He reiterated his call for the establishment of special courts to expedite corruption cases, urging the National Assembly to facilitate this process. He emphasized the addressing of corruption through extraordinary measures like special courts was crucial for Nigeria's development and called for legislative support in this endeavor. Fantastic. Can it be done? It behoves, and we hope to see that. Moving on, Uyo Zonal Command of the Economic and Financial Crimes Commission says it is investigating 8 suspected oil thieves in its custody. A statement by EFCC's head of media and publicity, Dele Oyewale, said that the suspects were dealing in petroleum products without appropriate licenses. That's illegal oil bunkering. According to the EFCC spokesperson, the arrested suspects bunkered in a cellophane-sealed compartment of the boat and in 4 GP tanks. Wow, GP tanks. He emphasized and expressed determination to ensure that the Nigerian waterways remain safe and free from criminal activities. While receiving the crew members, boats and products, the Uyo Zonal Commander, Assistant Commander of the EFCC, ACE-1, Bawa H. Saidu, who was represented by the Assistant Superintendent of the EFCC, ASE-1, Teresa Chenyan, thanked the Nigerian Navy and assured it of the Commission's readiness to always partner with it and other security agencies to curb economic crimes in Nigeria. I mean, GP tanks, cellophane, Nigerians, so fantastically corrupt in that level. We need you to stop illegal oil bunkering for the nation's sake. Moving on to Lagos State, the Special Offences Court in Ikeja has sent back the immediate past governor of the Central Bank of Nigeria, Godwin Emefiele, to the custody of the Economic and Financial Crimes Commission till April the 25th. Justice Rahman Oshodi made the remand order shortly after the anti-graft agency arraigned Emefiele on 23 counts bordering on abuse of office, accepting gratifications, corrupt demand, receiving property fraudulently obtained, and conferring corrupt advantage. In the substance of the charges, the EFCC alleged that he abused his office while he was CBN governor through allegations of allocations of $4.5 billion. Come again. $4.5 billion, Emefiele, are you serious? And 2.8 billion naira, and was arraigned alongside Henry Isioma Omoile, who the EFCC accused of accepting gifts from agents, and both defendants pleaded not guilty to the charges, while Justice Oshodi ordered that Emefiele should be remanded in EFCC custody. He ordered that Isioma Omoile be remanded at the Ikoyi Correctional Center, where he was already being held, while adjourning till Thursday, April the 11th, 2024, to hear their bail applications. At the Monday trial at Lagos, the EFCC prosecutor, Mr. Rotimi Oyedepo San, told the court that Emefiele allegedly abused the authority of his office as CBN governor by allocating foreign exchange in the aggregate sum of, once again, heavy money, $2.2 billion without bids and without acts that was prejudice to the rights of Nigerians. Oh, God help us. Now, UBA is releasing their audit reports. The United Bank for Africa has recorded 608 billion naira profit after tax as its gross earnings rose to 2 trillion naira at the end of the 2023 section. The bank released its audited financial results for the full year ended December 31st, 2023, showing exceptional and impressive performance across all major indicators, despite the highly challenging global economics and business environment, UBA recorded a laudable profit before tax with an exponential growth of 277% to close the year under review at 758 billion naira, rising from 201 billion naira recorded at the end of 2022 financial year, while profits after tax grew by 257% from 170 billion naira in 2020 to 608 billion naira in the year under consideration. The 2023 financials filed by the bank at the Nigerian Exchange Limited, that's the NGX, on Monday showed an impressive leap in gross earnings as it grew from 853.2 billion naira recorded at the end of 2022 to close it at 2.8 trillion naira, representing a strong 143% growth. The bank's total assets also rose remarkably by 90.22%, doubling at the 10 trillion naira mark. 10 trillion naira mark to close at 20.65 trillion naira at December 2023, up from 10.86 trillion naira at 2022. This leap remains a very significant achievement and milestone in the history of the financial powerhouse. Consequently, UBA Group shareholders' fund rose from 922 billion naira as at December 2022 to close the year 2023 financial year at 2.0 trillion naira, achieving an impressive growth of 120.2% compared to the prior year. In the year under consideration, UBA Group cost-to-income ratio dropped from 59.2% in 2022 to 37.2%, pointing at the group's improving efficiency in fulfillment of the promise made by the UBA Group chairman, Tony Elumelu, to shareholders at the last annual general meeting, AGM. The bank proposed a final dividend of 2.30 kobo for every, that's 2 naira, come again, 2 naira 30 kobo for every ordinary share of 50 kobo for the financial year ending December 31st, 2023. There are some rich men on the way. The financial dividend is subject to the ratification of the shareholders during its upcoming annual general meeting, the AGM. UBA also recorded a 61.3% growth in loans to customers, moving up to 5.5 trillion naira in 2023, while customers' deposits improved by 90.31% to 14.9 trillion naira. I mean, customers are having in their deposit 9.3 trillion naira recorded in the corresponding period of 2022, reflecting increased customer confidence, enhanced customer experience, successes from ongoing business transformation programs, and the deepening of its retail banking franchise. Nice and especially, it's fantastically exceptional. Commenting on the results, UBA's Group Managing Director and Chief Executive Officer, Oliver Alauba, said that I am very pleased with the unprecedented results achieved by our group in the financial year 2023. The group made a profit before tax 758 billion naira from 201 billion naira the prior year. The balance sheet also grew by 20.7 trillion naira from 10.8 trillion naira in the previous year. I'm beginning to have a headache. He said the group's shareholder funds crossed 2 trillion naira from 922 billion naira in 2022. While total assets crossed 20 trillion naira mark, 90.2% year-on-year growth. The group is well positioned for further business expansion in the financial year of 2024, having closed the financial year 2023 with capital adequacy ratio of 32.6%. He added that the bank's diversified business model, Pan-African and international strategy, is justified by the contribution of its ex-Nigerian businesses to the group's results and reinforces its resolve to expand our market share of customers, funding, digital and transactional banking businesses across Africa. Driven by our customer service and execution-led delivery model, we will continue to expand our market share and create value for our shareholders and meet the expectations of our various share and stakeholders. That's the JMD speaking. The UBA's Executive Director of Finance and Risk Management. I mean, all of you who have to join the payroll, all of you have to come out for your names to be heard. Ugo Mwangogo, he said that the 2023 full year was a particularly eventful year with galloping inflation and currency depreciation ravaging key markets amidst pockets of regional conflicts and security challenges. Yes, we are about that. I am delighted, however, at the strong growth in the year earnings and profitability recorded in the year. The group conservatively set up significant impairment reserves against its overall risk assets portfolios, considering the latent impact of macroeconomic headwinds on our credit portfolio. Consequently, cost of risk grew to 3.09% from 0.63%. Did you hear that? Cost of risk grew to 3.09% from 0.63% to the prior year, Wangogo said. And on the expectation for the 2024 financial year, he said the group remains fervently committed to sustainable growth and maintaining its strong compliance and risk management practices culture, even as we drive our business through the next phase of growth. I mean, UBA is standing on solid ground. Moving on, the chairman of the Nigerian Indigenous Carrier Air Peace, whoa, London man, Mr. Allen Onyema, has raised the alarm that foreign carriers operating the Nigeria-UK route are allegedly conspiring to send Air Peace out of international operations by crashing airfares on the route. Onyema gave the revelation on Tuesday while featuring on an interview program. He alleged that there is unspoken alliance among foreign airlines to use lower pricing to eject Air Peace from the Nigeria-London route. God forbid bad thing. If they took out Air Peace prematurely, this country will pay dearly for it. 10 times over, billions will be lost. There will be another heavy strain on the Naira, he said. Correspondent recalls that Air Peace reciprocated the lopsided bilateral air service agreement (BASA) between Nigeria and the United Kingdom when the local airline began direct flight operations from Lagos to Gatwick Airport in London on March the 30th, 2024. Nigeria's Minister of Aviation, Festus Keyamo, and his counterpart at the Trade and Investment Ministry, Doris Uzoka Anita, were on board the inaugural Lagos-London flight alongside businessmen and women. Many industries observers have applauded the development, saying that the development will encourage local airlines to commence international flights to profitable routes. Press also reported how the price of international flight tickets on the London route, which was as high as 3.5 million naira for economy tickets. Are you hearing? Did you hear that? 3.5 million naira for economy ticket went for 1.2 as Air Peace commenced the London route, with foreign airlines such as British Airways, Virgin Atlantic, and Qatar Airways forced to slash their price. You're welcome to Nigeria. However, speaking on Tuesday, the Air Peace boss said foreign airlines operating the route are fighting back, and adding that his airlines are being deliberately frustrated in all ways. He cited ground handling and space allocation difficulties at Gatwick Airport in the last couple of days. It is a very devilish conspiracy, said a dissatisfied Onyema. All of a sudden, foreign airlines are underpricing below the cost. It is not up to 1 month. An airline was advertising $100 and another one $305,000, $305, $350. Fill up the entire aircraft and carry people on the wings. it's not even enough to buy your fuel. Wow. Fill up the entire aircraft and carry people on your wings. It's not enough to buy your fuel. So why are they doing that? Their governments are supporting them because Nigeria has been a cash cow for everybody. Oshofri. Their governments are supporting them by doing this and to take airpeace out. The idea is to take airpeace out, and the moment they succeed in taking airpeace out, Nigerians will pay 20 times over again, he said. Oyema therefore invited other Nigerian airlines to join the Nigeria-UK route to break the monopoly hitherto enjoyed by foreign carriers operating in the 4 major gateway airports of Lagos, Abuja, Kano, and our city of Port Harcourt. I invite other Nigerian airlines to join the fray. Let them come. Let all of us do international operations. Yes, international aeropolitics is very dirty, but somebody must pay the price, he said. Don't forget, Atlantic Television Network is open for advert placements, bookings, and commercials, and you can connect with us and watch us on our ATN socials, Facebook and YouTube, Atlantic Television Network, on Instagram and TikTok, Atlantic TV Network 1, on X, formerly Twitter, Atlantic TV Net, and watch us live on our website, www.atlanticnetwork.tv. Moving on petroleum matters, oil marketers have called for a downward review in the pump price of the automotive gas oil, popularly called diesel, being produced by Dangote Petroleum Refinery to between 700 naira and 850 naira per litre, as operators plan to meet managers of the refinery next week. The largest downstream marketing association, the Independent Petroleum Marketers Association of Nigeria, which made the call in an interview with press, said that 1,225 naira per litre of diesel from the indigenous refinery was high because the commodity was produced in Nigeria and not imported. The Petroleum Products Retail Outlets Owners of Association of Nigeria also called for a reduction in the price of Dangote diesel. The groups called for the intervention of federal government and urged the marketers and managers of the refinery to consider the high cost of logistics required to transport the product from Lagos, where the refinery is located. The oil marketers pointed out that the product is being handed and landed in Nigeria by some importers at 1,250 naira per litre, following the appreciation of the naira against the dollar, adding that this should be another reason why the Dangote refinery that produces diesel in Nigeria should cut down its price. According to the oil marketers, Dangote diesel produced at Dangote refinery has no vessel cost, import charges, and other costs associated with the importation of commodity into Nigeria. This comes as it was gathered that the marketers under the aegis of Ipman and Independent Petroleum Marketers and Petroan held separate meetings on Monday to deliberate on the pricing of petroleum products from the refinery as well as other issues. The press has reported on April the 3rd, 2024, that the $20 billion refinery started pumping out diesel to the domestic market the previous Wednesday, that's March the 27th, 2024. The report stated that the refinery sold a minimum of 1 million litres to each registered oil marketer that got the product from the plant since it commenced diesel sale. Officials of the multi-billion-dollar plant and dealers have confirmed that the product was dispensed to marketers at between 1,225 naira per litre and 1,300 naira per litre, depending on the volume of purchase. Reacting to the cost of the commodity during an interview with correspondents on Monday, the National Publicity and Public Relations Officer of Ipman, Chief Chinedu Ukadike, commended the refinery for the commencement in the release of refined products. He, however, urged the managers of the plant to review the cost of the product downwards, providing reasons why the price of Dangote diesel should be cheaper than what was imported. Ukadike said during the construction of Dangote refinery, we supported and welcomed it. Also, it was our prayers that an indigenous refinery be opened so that it will limit the expenses of logistics in terms of importation, clearing, and other activities associated with bringing products into the country. These are some of the hurdles that necessitated the high cost of AGO or diesel being imported into the country. So now that a private refinery with a high capacity has started producing petroleum products here in Nigeria, we will appreciate that its products being sold to Nigerians will be cheaper than the landing cost of imported products. I mean, the dollar is currently about 1,270 naira to 1,290 naira and is coming down. So if the dollar is a determinant factor in terms of the importation of petroleum products and diesel is sold by those companies that imported at 1,300 naira per dollar, I believe that Dangote refinery should not measure the price of its diesel with the parameter of the forex. The Ipman PRO stated that the forex should not be benchmarked for the price of Dangote refinery's diesel. Also, some other expenses on the cost of the diesel produced by the refinery have been waived. So those expenses should reflect on the price of the product. The refinery is in Lagos, so there is no vessel voyage cost, and this should be deducted from the price Dangote is giving us. Other marketers who imported their products are landing it between 1,200 naira and 1,250 naira per litre since the drop in forex. So Dangote should be giving us his product at 700 naira or 850 naira per litre because he is producing here. We buy at the price and it will further strengthen the naira, minimize profiteering and reduce the cost of goods and services that are transported using diesel. If you minus the cost spent on vessels, importation charges, and the cost of foreign exchange to some extent, the price of diesel will drop, Ukadike stated. He said oil marketers who would also submit their price requests to Dangote refinery next week, adding that Ipman will seek the intervention of federal government on the matter. We are trying to seek a meeting with the refinery's commercial department. I just came out of a meeting to speak with you, where we are discussing how to be able to persuade them to review their prices and also the government to intervene, he said. Gillis Harry, however, stated that the refinery would have to recoup the funds used in constructing it, as several billions of dollars were borrowed to develop the plant. Wow. Damned if we do, damned if we don't. You are watching Business News on ATM Business on Atlantic Television Network. We will be back after this very short business break. Please stay with us in business.
People into the country illegally. That is amazing.
Honorable
You human trafficker.
Honorable they are not picking our calls. They made up their minds.
So no agreement with the EU, but
Every day, our lives are changed by history.
We are one people, all of us.
Leaders, politics,
Nobody's ambition is what the
I have fought very firmly.
natural occurrence, war, and the world economy.
I belong to everybody, and I belong to nobody.
From the line across the ocean to the land beyond the mountains, through the Sahara, more trending sports and document the happenings around the globe. Only on ATN.
Welcome back to ATN Business on Atlantic Television Network in the great city of Port Harcourt. And now to the rest of our stories. We go international with the global stocks. Bullish trends in our world market progresses. Wall Street marched higher early Wednesday ahead of government's update on United States of America's inflation. It's not only Nigeria that has inflation, which could play into the Federal Reserve's next interest rate decision. Features for the S&P 500 and the Dow Jones Industrial Average each gained 0.2% before the bell could ring. Bagay, bagay. Latest consumer inflation data will be followed this week by another report on prices at the wholesale level. Investors will also be paying attention to earnings reports from companies including some of the U.S.'s biggest banks. Early Wednesday, Delta Airlines shares rose 4.1% after Atlanta Carrier reported the highest revenue for any first quarter in the history, while earning profits of $37 million. The profits and performance lifted the entire airline sector, with United States shares rising 3.6% and the American climbing 2.9%. Honest Company, the online personal care business founded by Jessica Alba, announced that the actress was stepping down as the chief creative officer. Late Wednesday, the company posted its first profit since 2021, and the shares ticked down the modestly lower rates before the opening bell. The dominant question hanging over Wall Street is whether inflation will cool enough to convince the Federal Reserve to deliver the cuts to interest rates that traders are craving and been betting on. There's a palpable sense of nervousness among investors as they exercise a modicum of restraint, concerned about the possibility of hotter than expected inflation rates. Stephen Ince of the SPI Asset Management said in a commentary. Some doubts have crept in following a series of hotter than expected reports on the economy, and traders now expect just 2 or 3 cuts to rates this year. Some are even talking about the possibility of 0. That's down from the forecast at the start of the year for 6 or 7 cuts, according to data from the CME Group. The Fed's main interest rate is at its highest level and in more than 2 decades, and the risk is that the rates left too high for too long and might cause a recession. In Europe, at midday, Germany's DAX and London's FTSE 100 each advanced 0.8%, while the CAC 40 in Paris gained 0.6%. In Asia trading, Hong Kong Hang Seng gained 1.9% to 17,139. The Shanghai Composite Index lost 0.7% to 3,027% after Fitch Ratings lowered its outlook for China's public finances. The report by Fitch cited increased risk due to China's shift away from reliance on its troubled property sector and rising public debt. there is little clarity on reforms measures to support medium-term fiscal considerations and consolidations, it said. China's finance ministry issued a statement saying that it regretted Fitch's decision to downgrade its outlook and insisting that risks from mounting debts were under control. Tokyo's Nikkei 225 gained 0.5% to 39,581, and S&P ASX 200 in Sydney gained 0.3% to 7,848%. India's Sensex advanced 0.4%, and the SET of Bangkok climbed 0.7%. Markets in South Korea were closed because they have an upcoming election. U.S. benchmark crude oil market sales right now gained 50 cents early Wednesday to $85.73 per barrel in electronic trading on the New York Mercantile Exchange. On Tuesday, it fell $1.20 to settle at $85.23, running its gain for the year so far to below 20%, while a jump in oil prices this year has raised worries about a feed-through into inflation. Oil will likely need to rise well above levels seen even in the peak of the Russian-Ukraine commodity price spike concerning the war for a meaningful impact on core inflation. Don't forget, all this because of the Russian-Ukraine war. The Bank of America strategist said in a Bank of America Global Research report that Brent crude oil, the international standard crude oil, was up 53% to $89.95 per barrel, after falling 96 cents on Wednesday to $89.42 per barrel. In currency dealings early Wednesday, the US dollar rose to 151.83 Japanese yen from 151.75 yen. The euro rose to $1.0860 from 1.0857. On Tuesday, the S&P 500 edged up 0.1% after barely budging the day before. The Dow slipped less than 0.1%, while the Nasdaq Composite rose 0.3%. Going to Consumer Price Index. Consumer price increases remained high last month, boosted by gas, rent, and car insurance, the government of the United States of America said Wednesday in a report that will likely give pause to the Federal Reserve as it weighs when and by how much it will cut interest rates this year. Prices outside the volatile food and energy categories rose by 0.4% from February to March, the same accelerated pace as in the previous month. Measured from a year earlier, these core prices were up 3.8%, unchanged from the year-over-year rise in February. The Federal Reserve closed tracks and core prices because they tend to provide a good read of where inflation is headed. The March figures, the third straight month of inflation readings, even well above the Federal Reserve's 2% target. I mean, the United States inflation is 2%. Above the 2% target, threatening to torpedo the prospect of multiple interest rate cuts this year. Federal officials have recently made clear that the economy is healthy. They are in no rush to cut their benchmark rates despite the earlier projections, and that they would reduce the rates 3 times this year. The figures will likely disappoint the White House as well, with Republican critics of President Joe Biden seeking to pin the blame for higher prices on the president and use it as a cudgel to derail his pre-election bid. Polls show that despite a healthy job market, a near record high stock market, and the steady drop in inflation, many Americans blame Biden for high prices. The chairman, Jerome Powell, has stressed that the Federal Reserve's policymakers need more confidence than inflation because it is steadily slowing to the Federal Reserve's 2% target, and stance and elevated profile of the monthly inflation reports could determine when and by how much, or even whether, the Federal will reserve its key rates this year. Rate cuts will lead over time to lowering borrowing costs for businesses and consumers, and could also fuel a stock market rally. Overall, consumer prices rose 0.4% from February to March, also the same as previous month. Compared to 12 months earlier, prices rose 3.5%, up from year-over-year figure of 3.2% in February. The inflation surge that followed the pandemic jacked up the cost of food, gas, rent, and many other items, though inflation has since plummeted from its peak of 9.1% in June. Wow. Average prices are still well above where they were before the pandemic. Earlier this year, Wall Street traders have projected that the Federal Reserve will cut its key rates up to 6 to 7 times in 2024. In March, officials signaled that they envisioned a 3 rate cuts, but elevated inflation readings for January and February, along with signs that the economic growth remains healthy, led several federal officials to suggest that fewer cuts and rates will increase and occur this year. Last month, employers ramped up hiring, and the employment rates fell down to a low 3.8% from 3.9%. That was a huge one. A report on the manufacturing also showed that factory output expanded after more than a year of contraction. Such signs of economic vigor have also complicated the prospects of Federal Reserve's rate cuts, which typically occur when the economy stumbles. With growth healthy, and some economists have asked, why cut the rates at all? A strong economy also means that the federal policymakers can take their time to consider when and by how much to reduce borrowing costs for the consumers and businesses. Very understandable. At a news conference last month, Powell, the chairman, said the robust hiring on its own would require the federal rates to delay rate cuts. He noted that even though job gains were strong last year, inflation still tumbled thanks in large part to a surge in available workers, mostly in increasing immigration. Some other policymakers, though, say that the recent data has given them pause. And Lori Logan, president of the Federal Reserve Bank of Dallas, said last week that she thought it was too soon to consider rate cuts. And our esteemed business viewers, this is where we wrap it up on this esteemed edition also of the esteemed ATN Business on Atlantic Television Network in the esteemed city of Port Harcourt. I am esteemed Raymond Ken Mbata. I am open for business. I am open for advert placements. I'm open for business and bookings and commercials. Stay connected with ATN Atlantic Television Network on our socials, Facebook and YouTube, Atlantic Television Network, Instagram and TikTok, Atlantic TV Network 1, on X, formerly Twitter, Atlantic TV Net. Watch us live also on our website, www.atlanticnetwork.tv. Peace and unity are the pathways to progress. Until I come your way, same time tomorrow, stay tuned, and thank you for watching us on ATN Business.
From the line across the ocean to the land beyond the mountains, through the Sahara, we bring on-spot news, live analysis, expert discussions on trending stories in politics, business, socio-economy, sports, and documentaries. So catch all the updates on the happenings around the globe. Stay focused on the fact today, only on ATN.